How do you know what products are taxable and what products are not? Because here's the thing, not every product is taxable. And what's taxable in one state might not be taxable in another. In this video, we'll cover the basics of product taxability, how states decide what's taxable, and why the rules aren't always as straightforward as you'd think. But first, you have to remember, the sales tax is not a federal tax. There's no national sales tax law. This is a common misconception. Instead, each state sets its own rules about what's taxable and what's exempt. That means something could be fully taxable in one state, partially taxable in another, and completely exempt somewhere else. So while it might feel like sales tax should be consistent nationwide, it isn't. It's 48 separate systems that all work a little differently. So how do you keep all this straight? Well, as a business owner, that means your tax setup has to be specific to the states where you sell, not just a single universal setting. When it comes to product taxability, there's one big rule to remember. Items are assumed to be taxable unless the state specifically says otherwise. That's the baseline. Every exemption, like groceries, clothing, or digital goods, comes from a specific carve-out written into the state's tax code. So unless there's a clear exemption for your product, you should always assume it's taxable. That said, there are a few categories of products that are treated differently from state to state. So let's look at a few examples where some states tax an item while others don't. First, clothing. Some states like Pennsylvania and Minnesota exempt most clothing from sales tax. But other states, such as New York, exempt it only up to a certain dollar amount and tax anything above that threshold. And many states like California and Texas tax clothing entirely. The second example is grocery items. Some states tax all groceries, others exempt them completely. Some states tax only prepared food but exempt unprepared groceries. The definitions can even vary. One state might classify granola bars as candy while another consider them food. Yikes! The third example is SaaS, or software as a service, and digital goods. Software as a service and digital downloads are newer categories, and states take different approaches. Some treat SaaS as a taxable product because you're accessing a piece of software, while others see it as a non-taxable service. These examples show how product taxability depends entirely on each state's rules and not a nationwide standard. To understand how states decide what's taxable, it helps to know one key term, and that is tangible personal property, otherwise known as TPP. Tangible personal property simply means physical items that you can touch, like shirts, mugs, furniture, electronics, or packaged goods. Most states start by saying all tangible personal property is taxable. They then layer on specific exemptions, like for food, medicine, or manufacturing equipment. Only a handful of states tax services. In most states, services are considered exempt, but as the economy shifts more toward digital goods and online services, those rules continue to evolve. But we need to clear up a common point of confusion. Product taxability and exemptions are not the same thing. Product taxability is how the state treats an item. For example, is clothing taxable in Illinois, or is SaaS taxable in Florida? Exemptions, on the other hand, often depend on who is buying and how the product is being used. For example, if a customer buys something to resell, they may provide you with a resale or wholesale exemption certificate. That means they don't pay sales tax when buying from you because the tax will be collected later when the product is sold to the final consumer. That said, with sales tax nexus, having a physical or economic presence in a state means you're required to collect sales tax there. But just because you have nexus in a state doesn't mean every sale you make there is taxable. You're only required to collect sales tax on taxable goods or services that you sell in that state. So if you sell a mix of taxable and exempt products, or if you sell through multiple platforms, your e-commerce or accounting system needs to identify which products are taxable in each state and apply the correct rates automatically. That kind of automation helps keep you compliant and ensure you're not over or undercharging your customers. When you understand all of these distinctions, setting up your sales tax system becomes much easier and far less stressful. But maybe you're still trying to figure out a lot of the basic principles when it comes to sales tax. Well, for more information on that, check out this video. And remember, when in doubt, talk to a sales tax professional.